Good morning, ladies and gentlemen. It is a great pleasure for me to be here to make a presentation about the global economic growth and the Chinese economic growth outlook in the year of the 2023. Thanks for the invitation of Bing Hong. So right now, please allow me to share my PowerPoint. Today, I want to use 40 minutes to give a brief introduction about my personal view about the global and China's economic outlook this year. After that, we will have 20 minutes Q&A. So basically, I will talk about the global economic outlook first, and then I will focus on the Chinese economic growth. I will talk about the current situation of the economic growth in China, and also the policy stance about fiscal policy and monetary policy this year. Then I will talk about the movement of the global asset prices, including the exchange rate. So if we look at the global economy this year, I think there are three major uncertainties. The first uncertainty is the trend of the global inflation. Last year, there is very high inflation in some advanced economies such as US, UK, and the Eurozone. So this high inflation forced the central banks of these economies to contract monetary policy collectively, especially the interest rate hikings. The second uncertainty is the evolution of the international geopolitical conflicts, especially the Russia-Ukraine conflict. And the third, maybe in a more longer-term perspective, is the deglobalization process, accelerated by the, for example, the Sino-US trade war, and also the Brexit, and then the COVID-19 epidemic. I think the impact of the COVID-19 epidemic to the global economic growth has been vanished, but it will have a very longer term impact in the distribution of the global production network. The global production network has become more regionalized. That will cause the efficiencies to decline. And these three global uncertainties will result in a stagflation pressure to the global economy this year. For example, in the short term, on the one hand, the epidemic, the monetary policy by the contraction by the advanced economies, and the deglobalization trend will pull down the global economic growth. On the other hand, the geopolitical conflicts has caused the rise of the global commodity price. The regionalization of the global production network will also push up the inflation. So we began to face the pressure of the so-called stagflation last year. And this year, I think we still face the pressure of stagflation. But for a longer term, before the burst of the COVID-19 pandemic, the global economy faced the so-called secular stagnation and every summers, which means the global economic growth has been below the potential level for a long time. But if you look at the major factors causing the secular stagnations, they never change. For example, one force is the global aging in population structure. Also, we are facing a much slower productivity growth around the world. The deglobalization trend will also exacerbate this trend. And also we have seen the income gap exacerbating in various countries. So all these four long-term factors will still result in the secular stagflation pressure in the long term. So my view about the global economic growth is not so optimistic. In the short term, maybe in the next several years, we will face a stagflation. But after that, when inflation declined, we will continue to face the projection of the secular stagnation. So this chart has showed the inflation pressure for major countries. You can see that in the last year till now, both the United States and the Eurozone has faced a very high inflation level. This round of inflation has been driven by both demand side and supply side. From demand side, the excessive loosened monetary and fiscal policies after burst of this pandemic has increased the inflation pressure. From the supply side, the rise of the global commodity price after the Russian-Ukraine conflict has also resulted in the inflation pressure. So if the inflation has been driven by both demand and supply forces, so it's difficult to push them down only by the contraction of monetary policies. We can see that the Fed, the ECB, and the BOE has all collectively withdrawn their policies. For example, the Fed has already interest hikes at times. So the accumulated is 450 basis points. And both the ECB and the BOE has also raised their interest rate several times. The collective contraction of global monetary policies will result in the global financial turmoil, and it will also cause the financial crisis in emerging and developing economies. So this chart has showed that both the long-term interest rate of the United States and the US dollar index have surged significantly last year. So the rise of the global long-term interest rate will cause the prices of the global risk assets to drop. For example, the stock market index in all around this world, and also the commodity price, all of them have dropped as a result of the interest hike. And also the risk averse assets, their price will also drop. For example, the treasury bonds and also the price of gold. Some emerging and developing countries, they suffered the capital outflow, depreciation of their local currencies, and the asset price dropping dramatically. So some of them has already suffered the impact of the financial crises, such as Sri Lanka, Pakistan, Egypt, Argentina, so on and so forth. If we look at the movement of the global commodity prices, last year, some of them have surged a lot in the several months before they began to drop as a result of the rise of the US dollar index. But in the future, what direction will they go is still unclear. So from the demand side, the commodity price tend to decline because this year the global economic growth will slow down. So that will cause the shrinking of the aggregate demand. But from supply side, if the international geopolitical conflict is exacerbated, that will cause the interruption of the supply of global commodities. So the commodity price may go up again. Also, we have a third perspective from the denominating currency, because right now, most of the commodity tradings are denominated in US dollars. So the fluctuation of the US dollar index this year will add more uncertainties to the commodity prices. So to summarize about our outlook of the global economic growth this year, we think this year we will still face the pressure of the stagflation. So if you look at this chart, the blue line means the global GDP growth every year, and orange line is the global inflation every year. So you can see that in the 1970s, there is a serious stagflation. In the 1990s, there is also a mild stagflation. All of these two stagflations, they have a common reason, which is the geopolitical conflict, especially some kind of wars in the oil production area. So you can see that last year, I mean the year of the 2022, the global economic growth has declined. However, the inflation pressure has risen. So this trend will continue this year. So this year, we believe the global economic growth will below 3%, but the global inflation pressure maybe will go beyond 5%. So in the near future, the stagflation pressure will continue. So the right side is the new projections of the global economic growth this year by the IMF, January this year. So you can see that the global economic growth will go down. And most important advanced economies growth will also went down. But the emerging and developing economies growth will keep stable. Chinese output will have a rebound. So from now on, I will transfer to the topic of the Chinese economic growth this year. From that chart, which shows the annual growth rate of Chinese economy, you can see that since the year of the 2007 till 2019, which means the last year before the impact of the pandemic, the economic growth of China has declined significantly. There are major two reasons. The first is the change of the demographic structure. From the year of the 2010, the ratio of the working people to old people has began to decline. So in the year of the 2020, because the burst of the pandemic, the economic growth is just only 2.2%. For the year of the 2021, there is a very big rebound of the economic growth. But last year, the year of the 2022, the GDP growth is just 3%. If you look at the right chart, which shows the yearly contribution of the 3 trillion to the economic growth, which means the domestic consumption, the investment, and export, you can see that if you compare the year of the 2022 to the years before, you can see that the very low economic growth last year is majorly contributed by the shrinking of the domestic consumption. And also the domestic investment contributions also dropped, but the contribution of the net export is very stable and is significant in the 3 years during the pandemic. So this is a start for our analysis for the Chinese economic growth. First, we will look at the consumption. So this chart shows the monthly consumption growth in China. So you can see that during the pandemic, it is very volatile. But basically speaking, the consumption growth is very weak during pandemic. For example, you can see that during the second quarter and the fourth quarter of the 2022, there is a negative consumption growth in China. So why the consumption growth is so low? I think there are major two reasons. The first reason is that due to the negative impact of the pandemic, the income of the household working in the service sector has suffered a lot. A lot of the enterprises were closed and a lot of the laborers were laid off. So if you look at the left chart, you can see that both the urban and the rural households disposable income growth has declined significantly after the burst of the pandemic. So this is a quarterly data. You can see that right now, although the very mild rebound, but the level of the income growth is still quite low compared with the income growth before the pandemic. So if your income growth has declined as a rational decision, of course, you will cut your consumption expenditure. The second reason for the slow growth of the consumption is that right now the Chinese consumers' confidence about the future is still very weak. So if you look at the right chart, which shows the Chinese Consumer Confidence Index made by the Bureau of Statistics, you can see that in the second quarter of last year, the Chinese Consumers Confidence Index has dropped dramatically from a level of the 120 to less than 90. So we have never seen this decline before. Well, so which means because we have 3 years impact of the pandemic, the economic growth has slowed down. Some of the industries began to adjust. For example, the property sector, the education sector, the Medicare sector. So as a result, people's expectations about futures income exacerbated, and they are less so optimistic. So as a result, they will cut their leverage, which means they will cut their borrowing, they will consume less. So look at the future, because by the end of last year, the Chinese government has canceled the so-called pandemic control policies. So as a result, Chinese service sector began to resume this year. So we have already seen some evidence. So as a consequence, I think the household income growth will begin to pick up, and also the consumer confidence will begin to rebound. As a result, this year, I believe the domestic consumption will play a very active role to promote the economic growth. Secondly, let's look at the performance of the investment. The left chart shows the trend of the fixed assets investment growth of China. So you can see that from the year 2008 till now, the general trend is for the Chinese investment growth is declining. We are changing from an investment-driven economy to a consumption-driven economy. So if you look at the investment growth last year in 2022, so the overall investment ratio is slowing down mildly. The right chart shows the 3 major components of the investment. So the blue line is the manufacturing investment growth. The gray line is the infrastructure investment growth, and the orange line is the property investment growth. So you can see that these 3 indicators have different trajectories last year. For example, the property investment growth has declined dramatically as a consequence of the Chinese government, they have a very tight control on the property sector, especially on the financing of the property developers. However, the infrastructure investment growth last year has a strong rebound because in China, infrastructure investment has been dominated by the local governments. So as a countermeasure to the slowdown of the economy, so the local government began to stimulate the infrastructure investment. And also the central government's fiscal policy has given them a lot of the support for them to finance the infrastructure investment. If you look at the manufacturing investment growth, it has decreased mildly. So as a result, you can see that the overall investment growth has declined last year. So how about the investment growth this year? So my guess is that the infrastructure investment growth will continue to be strong this year because the Chinese government will take expansionary fiscal policy and monetary policy to support the infrastructure investment. As for the manufacturing sector investment, I think this year it will be stabilized, and maybe we'll have a mild rebound as a result of the rebounding of the domestic consumption, which means domestic market-oriented investment will begin to pick up. But I'm not so optimistic about the rebound of the property investment growth. Because right now, if you look at the property developers and also look at the potential consumers, their expectations about the development of the property market has changed. So although the Chinese government has already loosened the control on the property sector, especially on the financing of the property developers, but these developers tend to use the new fundings to pay back their old loans. They don't have a very strong willingness to increase the construction of the new projects. So this year, I think the performance of the property investment growth will still be very low. So finally, let's look at the third growth engine, I mean the export and import sector. So if you look at this chart, the blue line is the export growth, the orange line is the import growth, and the gray bars means the trade surplus, monthly trade surplus of China. So you can say that a very striking evidence is that in the 3 years during the pandemic, Chinese export growth is very strong. The average growth rate is around 20%. Why? There are 3 major reasons. The first reason is that during the global pandemic, so the export of some sectors are very strong. For example, the medical equipment and also the remote working devices such as the laptops. The second reason is that because the pandemic break out in China first. So after the global economy has suffered a strike of this pandemic, the consumers of the advanced economies, they find that only Chinese exporting firms, they are reopened. So this gives China a temporary advantage to increase their export growth. But if you look at the export growth in the recent months, it has already declined significantly. The export growth in China, the fourth quarter last year is negative. So I mean, this temporary advantage has vanished. So how about the export growth this year? I think it will have a very mild pace. For example, the export growth will be around maybe 5%, much lower than the export growth in the past 3 years. As a consequence, the contributions of net export to GDP growth will be decreasing significantly this year. So to summarize, for this year, the major growth engine will be the domestic consumption, and in some extent, the manufacturer sector investment and the infrastructure investment. The export growth contribution will decline, and the performance of the property investment will be quite low. Now let's look at the inflation pressure and the unemployment pressure in China. The left chart shows the movement of the CPI growth, both headline CPI and core CPI growth. So you can see that recently, Chinese inflation pressure is quite in control. The CPI growth is around 2%, and the inflation target of the PBOC is 3%. And the core CPI growth is just 1%. So it is quite mild if you compare it with the inflation in US or in Eurozone. However, as a result of the economic growth slowdown, right now China is suffering a heavy unemployment pressure, especially for the young people. So if you look at the right chart, the overall unemployment ratio is just around 5 to 6%. So it's okay. But if you look at the sub ratio for the age group of the 16 to 24, right now it is as high as 17%. So which means that right now we are facing a structural unemployment in Chinese labor market. So the young people, it is difficult for them to find a satisfactory job, but the overall situation is okay. So right now, let me summarize the major factors dragging down the economic growth in China. I want to provide two perspective analysis. First, the short term and then the midterm. So if we look at the short term, I mean, the economic growth this year, we are still facing some downward pressure. For example, both the households and the enterprises, they still lack confidence. So if their confidence is very low, they will not will to borrow, to leverage up in order to consume more goods or make more investment. The second issue is that both the balance sheets of the enterprises and the financial institutions, they suffered a lot from the negative impact of the COVID-19 and the economic slowdown. So the overall financial risks are rising. You may notice that right now there's a lot of the discussions about the risks of the Chinese local government debt. That's a very hot issue in Chinese academic circle and the policymaking circle. And the third is that I've mentioned before, the export growth will decline as a result of a slower global growth. And also we are facing some factors in the midterm perspective. I want to also point three factors. The first is a population aging in China. So last year is a very important threshold for Chinese population structure. Last year, the overall population in China began to decrease. So that is a very important phenomenon, which means in the future, the Chinese population aging will speed up, and we will be more prone to demand side impact in the future. So the second issue is the slowing down of the productivity growth. So, we have already excess capacity in the traditional manufacturing sector, so which will drag down the productivity growth, and also the structural changing of the Chinese economic structures. For example, in the past, we are driven more by the manufacturing sector, and in the future, we will be driven more by the service sector, which will also have some negative impact on the productivity growth in China. So I think this is a major obstacle for the further economic growth of China. And the third one is the international factor, which means the deglobalization trend, the rise of international geopolitical conflict, especially the China-US conflict, will also play an active role in the support of the economic growth in China. So how to deal with these major factors dragging down the economic growth? I think the Chinese government has already adopted systematic measures to push up both the current economic growth and also the potential economic growth. So I want to discuss the Chinese government policy response in two perspectives. The first one is short term, I mean this year, and the second one is for a longer time horizon. So for the year of the 2023, I think the Chinese government will continue to adopt a more expansionary fiscal and monetary policies this year, because I have mentioned for the short term, we still suffer some negative pressures for economic growth. So for fiscal policies, I think there will be several hypotheses. The first one is that this year, the central government fiscal deficit to GDP ratio will be raised from 2.8% last year to over 3% this year, which means more fiscal expenditures. And the second one is that this year the quota of the local government special purpose bonds, which finance the local government infrastructure investment, will be increased to maybe 4 trillion RMB. And third point is that Chinese government maybe will issue more treasury bonds. And the fourth one is that the policy banks such as the CDB and the Chinese Agricultural Development Bank will continue to play a more active role in the financing of the infrastructure investment for local governments. So for the second half of last year, a new policy tool made by these policy banks has contributed a lot for the rebound of the infrastructure investment of local governments. For the monetary policy, I think this year we will see more cuts of the required reserve ratio or the benchmark interest rate. As for me, I personally think that the importance of the interest rate cuts will be more important than the importance of the cuts of the required ratio, because the former can alleviate the financing cost for the small and medium-sized enterprises and the households. The second is that the PBOC will continue to use the so-called structural monetary policy to support the SME, the green industry, technology invention, and also industrial upgrading. The last one I want to mention is that although last year the RMB exchange rate against US dollar has depreciated against over maybe 40%, but the PBOC do not have some open market intervention on the market. So which means that the exchange rate of RMB became more free floating as a consequence of the systematic reform agenda. So this is the policy stance this year. And for the time horizon of for example, the next 5 years or next decade, I think the Chinese government will continue to accelerate the domestic reform and opening up process to promote the rebound of the Chinese potential economic growth. I think there are several points I want to mention. The first is that we will try to build a unifying domestic market by promoting a more freer flow of the various production factors such as people, technologies, capitals, and data. The second is that we will continue to reform our SOEs to providing a leveled playground for SOE private companies and foreign companies. The third is that we will speed up the land reform. And by promoting land reform, we want to accelerate the rural revitalization. And last one is that we will continue to open up Chinese domestic financial market. However, we will not fully liberalize the capital account because the capital account liberalization in international experiences often cause the breakouts of the financial crises. So Chinese government will still be conservative for the full liberalization of the Chinese capital account. So finally, let me give you projections about the economic outlook of China this year. As for the GDP growth, I think this year the annual GDP growth will be around 5.5%. So last year, I've mentioned is just 3%. So there is a significant rebound for the annual economic growth. The economic growth in the second half of this year will be stronger than the first half of this year. As for the inflation pressure, I think last year it is mild, and this year it will continue to be mild. For example, the annual CPI growth will be under 3%. Maybe it will be around 2.5%. Third, the overall unemployment ratio will be around 5% constantly. But for the ratio for the young people, I mean, for the age group of the 16 to 24, I think it will decrease from, right now it is 17%. Maybe we will need to drop from 17% to 11 or 12%. So which means it will improve. Fourth, this year, both the fiscal and monetary policy will continue to be accommodative. I have mentioned the major points of these two policies before. The fifth projection is for the exchange rate. So this year, generally speaking, I think the RMB will appreciate against US dollar modestly. For the first half of this year, it will fluctuate in a two-way. But for the second half of this year, Chinese economic growth pick up significantly, and maybe the US Fed will stop more interest rate hiking. So which means for the second half of this year, the RMB will appreciate against US dollar. So by the end of this year, right now the exchange rate is around 6.8, and by the end of this year, my guess is that it will appreciate to 6.4 or even 6.3. So the last one is about the projection of the domestic assets. I think this year I'm very optimistic about the performance of the Chinese stock market. The first reason is that we will face a more strong economic growth, which means the profit margins of the Chinese listed companies will rebound. And second one is that the monetary policy will be very accommodative, which means there is ample liquidities on the domestic financial market. And the third one is that this year we will begin to face net inflow of the portfolio investments by the foreign investors. However, For the property market, I'm not so optimistic. I have mentioned the long-term expectations have changed. So I don't think that this year there will be a great rebound of the both property prices and property investment. As for the bond market, I think for the low risk bonds such as the treasury bonds and finance bonds, I think this year there are some small investment opportunities because the risk-free interest rate tend to decline modestly. But as for the credit bonds issued by the, for example, the local government financing vehicles, real estate developers, or some small and medium-sized financial institutions, I think some of them still have a high probability to default. So there are two ways. There are different perspectives for different types of the domestic bonds. Okay, so this is my very brief introduction analysis about the global and domestic economic growth this year. So I will stop here and to see, do you have any questions? Thank you.
Professor Zhang, you can see there are 3 questions in the chat room.
Okay.
You can check them. One is the geopolitical tension, how the geopolitical tension affect the investment of China in EU. And the second is the, can you see them in the chat room?
Yeah. Okay, I have seen the questions in the chat room. Okay.
There are 3 questions.
Yeah, I will try to answer them. Okay. Okay, so the first question is, having in mind current geopolitical tensions and China's growth in 2023 and structural growth, how will that affect Chinese investment in the EU, especially in CEE or Western Balkans? Okay, so I think in the past several years, the Chinese outward direct investment has increased gradually because 7 years ago, you know that in the year of the 2016, there is a great wave of the Chinese outward direct investment. So inside them, there are some capital flights disguised in the forms of the outward direct investment. So Chinese government has strengthened the control on the ODI around the year of the 2016 or 2017. But in the past 4 or 5 years, Chinese government has loosened again the controls of Chinese ODI. So right now the ODI, the outward direct investments are major driven by the Chinese enterprises after a careful calculation of the revenues and the risks. So for the ODI growth this year, I think there are both a positive side and negative side. Let me mention the negative side first, which means the global risks are increasing. The geopolitical conflict also, I have mentioned, as a result of the monetary policy tightening in major advanced economies. So many emerging markets and developing economies began to suffer financial crisis. So the rising of the global risks will make the Chinese SOEs or private enterprises be more careful, be more conservative for their decisions to make new investments outside. So this is a negative side. But there are also some positive side. Right now, as a result of the US-China conflict in trade and investment. So right now, I think more and more Chinese SOEs and Chinese private companies they are adjusting the focus of the destinations of their ODI from the United States to Europe and other regions. So which means in the future, some Chinese enterprises will input more resources to the Europe market, including the CEE. So it is difficult to make an overall judgment about whether this year's ODI growth will be higher or lower than last year. But I think the general trend is that there will be more cooperations between Chinese corporate sector and the corporate sectors in Europe region. So that's basically my personal opinion. So this is the first question. The second question is that, would the structure of the Chinese investments in EU change? Infrastructure, transport, security. Okay. Right now, I think there are some kind of the structural change in the Chinese outward direct investment as the internal and external environment, all of them has changed. So in the past, my team has been studying on the performance of the Chinese ODI for the past decade. So in early stage, the Chinese ODI will be focused on the resources sector, right? After that, they began to have more investment, on the manufacturing sector, because it's nearer to the final market. And also it can, in some extent, it can circumvent the regulations from the, for example, the United States or other countries. But right now, I think the Chinese government ODI will be more focused on the, for example, the high techs, the green technology, the biologies. Because the Chinese domestic industrial structure has been upgrading, so that will also change the structures of the overseas outward direct investment. So it will also upgrade from the resource oriented, lower levels of the production manufacturing ended to more high-tech oriented. So I think this is a basic trend. So the third question is, how do you see the perspectives of EU-Chinese relations in the future regarding the Ukraine war? Wow, this is a quite big question. So I'm just an economic researcher, so we are focusing on my perspective. So I think the general trend for the China's domestic reform and opening up will not change. So China will be still, we will still have some market-oriented reform, and we still open up our domestic market, and will tend to be have more outward investment in the future. But frankly speaking, right now the relationship of between the China and the US has suffered some kind of tensions, and you can see that from the year of the 2018, we will have some kind of the trade conflict. And right now, this conflict has been expanded from purely trade to technology, to investment, to some other sectors. So which means there is China and the Europe will have a more broad future to have a different kind of the cooperation. So I believe that we will have a huge space to do a lot of the various kind of the corporations. But right now, I know there is some kind of obstacles in the geopolitical issues. So I hope that the two sides can find some creative ways to solve this kind of the geopolitical tensions, to promote the bilateral economic financial investment cooperation, because this will be beneficial for both the two sides. So thank you. So I have answered all these three questions. If you have other questions, please feel free to ask.
In convenience as a host, I also have questions for you, and it is questions about the concept. You know, from the global perspective, in recent years, the developing countries represented by China, India, and other developing countries have emerged as a globe. So what is your idea about the concept of rise of the East and the decline of the West? And what is the significant impact for the global economy? Could you share your ideas with our participants?
So what do you mean by the rise of the East and the decline of the West?
东升西降。
Well, I know. So in which perspective? I mean, the economic growth or other side?
In economics.
Okay. So this is a very important question. I think if you look at the short-term economic growth, in the year of the 2022, yes, the performance of the advanced economies, they are relatively stronger than the performance of the emerging market countries. For example, you can see that last year, both the US and the Europe is growing very fast, so which result in the high inflation pressure. But last year, if you look at the growth rate of China, so it's just 3%, quite below the potential growth rate. But this year, the situation will change. So as a result of the monetary policy tightening, this year you can see that the economic growth of the Europe, the UK, and the US will decrease. But as a result of the effect of the lower base and also the expansionary policies and the cancellation of the pandemic controlling policies. So this year, the economic growth of China will rebound. But I'm just talking about the short-term economic growth. So this year, I think maybe we will see less financial crisis in emerging and developing countries because the tightening pace of the advanced economies, central banks has slowing down. But this year, I'm worried about that the geopolitical conflict will increase. So it will become the major obstacle for the global economic growth this year. So I think the major countries, major players should cooperate, have a closely cooperation to find some creative ways to avoid the further exacerbation of the geopolitical relationship. And I have mentioned the deglobalization trend. I hope, as a researcher of international finance, I hope in the future, the major players can find a new way to speed up the globalization process again. Thanks.
Okay, thank you. Is there any questions for Professor Zhang? There's a new message. No. Thank you very much.
Okay. Yeah, I've seen the new message. I want to ask if something regarding Chinese enterprises considering investment in the non-EU countries. In your opinion, what are the biggest obstacles for these companies? And is the non-EU status some kind of deterrent when considering any types of flagship projects, especially infrastructure? Okay. So
this is the question from Marcel, our corporate scholars.
Yeah. Actually, I think this is a very interesting but a very difficult answer. I think for the Chinese enterprises which considering to invest abroad, so the natural calculations for them is that they want to minimize the risks. They want to minimize the risks, both the economic risks, for example, the cyclical fluctuation of economic growth, and the political risks. So if you are a member state of the Eurozone, so I think both the risks of the for economic and political perspectives are more controllable for the considerations, because if a member state of the Eurozone have suffering a financial crisis, maybe the ECB will provide some aid for them to but if you're not a member state of the EU, maybe you cannot share this kind of the help. And also the risk for the political default is also will be much controllable. So I mean, for the Chinese SOEs or private enterprises, there will such kind of very natural considerations. So to promote the cooperations with the Chinese enterprises and the non-member states Europe countries, so we think maybe we can sign some kind of the bilateral investment treaties to give Chinese enterprises more protections, and under international practices that can make the Chinese companies feel more comfortable to make their decisions to making some big project investment in this kind of countries. Thank you.
And there is a new questions from the Konrad from the Poland. His question is about the new technology issues. Right.
Yeah, I have seen this question. So what will be the influence of the American, Japanese, and Dutch export restrictions in the chips for Chinese economies? So what will be the Chinese answer for these actions? And firstly, we don't we don't welcome this kind of the actions, because I mean it is not free trade. It is contrary to the WTO. Such kind of the logic. And I think there will be several actions by the Chinese government. The first is that we are still open for the foreign companies. Different kinds of corporations will come. This is the first act, especially if the United States close their door to China for this high-tech exports. We especially welcome, the Europe countries, Japan, South Korea, we can have a more close cooperations in this area. And the second one, we have to speed up the domestic innovation. If we cannot export this kind of technologies, we must rely on domestic technology innovation. It is not easy, but we must do it. So the Chinese government has put lots of the resources to subsidize the research in lots of the high-tech sectors, including the chips. And also we are encouraging private enterprises to input more resources in the research, in the research area. And also the Chinese universities became more active in the cooperation with the Chinese enterprises. So, there are two ways, the external cooperation and domestic innovation. We do not want to rely just on one, but right now there's more restrictions on external cooperation. So we have to rely more on the domestic innovation, but we're still expecting to have further cooperations with foreign countries, enterprises, and also foreign universities. We are open to all kinds of the cooperations in this area. Thank you.
Okay, thank you. Is there any more question for Professor Zhang? Oh, okay, I think I can make a conclusion. Okay, thank you. Thanks very much for the lecture and the response. So after suffering from the COVID-19 in past 3 years, the lockdown policies has been over in December last year. And the face-to-face communications with European friends will return to normal. In this lecture, Professor Zhang shares his ideas about the major uncertainties about the global economy and the current economic situation in China. He also makes some predictions about the global and China's economic outlook in this year. It is well known that the government officials will be reappointed to their jobs after the National People's Congress in March. So China's economic policies will become more clear in the post-pandemic period. We are looking forward to the fruitful development in coming years. Okay, thank you all for your time and attention. See you next time.
Okay, thank you.
Okay. 谢谢您，张教授。
拜拜。
拜拜。